Trading, and I have one of my old friends, good friends. I'm so excited to have him the first time on the show. John Seville, how are you doing? Good to see you.
I'm doing great. The boys in blue today.
I can see that, but you haven't aged one bit. I haven't seen you like in a year or so, and look at you. Your hair's still looking good. You still got the beard going on. Look at you.
Well, I'm kind of like a stock, if you'd seen me throughout the whole 12 months, I think I went up 20 pounds, down 15 pounds, and now I'm about the same as when you saw me last.
Yeah, I was a little bit different. I was like a stock, and then I shorted. I basically went up and went up and went up and up, and I just dropped basically 50 pounds, and I'm done. So so hopefully I keep it there. But that's good to see. So where are you now? I mean, I know that listen, everyone can recognize from his little accent there. He's from Australia, but where are you settling now? Where are you?
Well, we just actually a couple of weeks ago moved into our dream unit, which is a little ski unit in a place called Panorama Mountain, British Columbia. So I'm probably the only Australian in the world that hasn't lived on a ski hill. So I felt like my rite of passage had been robbed from me. So we just took possession a couple of weeks ago and getting settled in and waiting for the snow to come.
Oh, you're in Canada?
Up in Canada, yeah, British Columbia, absolutely.
Oh, wow, that's really, really nice. That's a really nice area. I mean, listen, I love going to Canada. I mean, there's probably 20% of my students, all Canadians. Oops, just lost your camera, John. Well, let's get his camera back. There you go. Yeah, so
the sun's rising, so I just pulled the curtain closed.
The people are great up there, and it's just nice, and there's a lot to do up there. So, and a lot of great traders. I mean, there's a lot of traders up in Canada. I mean, I just came back from Toronto 2 weeks ago. I did a money show event up there, and yeah, we had a great audience. So it's good to see there. But so it's been, you all settled in now. Everything's good.
Absolutely. Well, it's been as we know, the September, October, November, December months in the market is make hay while the sun shines. If you're trading the market and you like volatility in either direction, you've got to be on point during these months, especially. So glad to be back on the same time zone again.
And what's so funny? You bring up the time zone thing. I mean, you and I had something very similar. We all went away at the same time. We all went away to Greece. I was there. I had to go for a wedding, and kind of made a trip out of it. And what was pretty cool about going to Europe is that the time zone difference. I mean, it was difficult for you. I don't know how you did it when you were up in Australia, but like now over there, it was like 7 hours. So it's like when the market opened up, when everything was done, it was like almost like 7 o'clock. 5, 6 o'clock. So you get to enjoy the whole day and you get to trade. Did you trade at all over there, or you just basically enjoyed life?
Absolutely. Actually, I found that the European time zone is my favorite time zone for investing and trading, because in Australia, when we're over in Australia, which we go back often, it is a bit weird because you're right. You're getting up when the market's already closed. So difficult for meetings. Catching up with people on the East Coast is hard. But Europe, I do a lot of analysis after the market's closed. I pre-program a lot of my trades, set and forget. Again, when you're doing analysis in Europe, you've got 7 hours when your brain's at its freshest to run your scans, to program your trades in. You get 7 hours to make those decisions, and then off you go with your day. So I really love that. I love the European time zone so much that when we came back and my body clock was waking me up at 3 a.m, I decided just to keep it that way and give it a try. So I've been waking up 3 a.m. my time each day to try and keep that window of my time.
Yeah, I was having basically the same problem when I was out there trading, and the time zone. When I got back, I found the same issue with me, and I was kind of like, it took me a while to get my time zone back. I mean, and I was waking up 3 o'clock in the morning, same thing like you were, but which was kind of weird. I mean, when I go West Coast, when I go I've been to Vegas or California, and I've been back. It only takes me a day to get back my time zone, but I don't know, for some reason I was in Europe. It was like really hard. Going there wasn't that bad, but coming back was great. Is the issue. Would you do anything exciting there?
Well, it was a kind of a rite of passage for my father, who's always wanted to learn to sail. And, you always talk about the father-son trip. And I'm always remembered by that the song "Cats in the Cradle with a Silver Spoon," and it plays in my mind more and more these days. About the older I get, the less time I spend doing things I used to, and then I thought, well, you know what? Let's make the time, and so that my father and I and my mother, partner Leanne, we got to spend 10 days on a boat sailing through the Greek islands. A couple of very near misses, almost got blown into a few cliffs. We had a 70-mile-an-hour winds when all the boats were grounded, and we decided just to go at it. I said, I love volatility. Let's sail into a hurricane.
You heard what happened to the people in that billionaire family that happened in Sicily? You know, they had that big super $1 million yacht. I mean, you can't screw around down there. I know when I came back there,
2 days after we got back to sea, and in fact, a French sailor was killed on the same day that we were sailing on a more sober note, which is obviously quite sad. But yeah, it wasn't the right risk assessment decision.
Yeah, it was like the volatility we teach in trading. You know, it's like you want to risk at least as much money as possible with a high amount of reward. You basically risk the most amount of money with the least amount of reward. So let's not do that. But let's talk a little about you. I mean, listen, John. I mean, you've been trading for a long time. How long have you been doing this for now? I mean, listen, I know you for several years. How long has it been?
Well, I think we first met at one of the trader expos maybe 15 years ago. I think something like that back in Las Vegas. That was how long ago it was. Because I remember it was about 10 years ago when I was sending you a text message holding up a Fausto Pugliese shirt in Italy, if you recall.
Right, I remember that.
Down in the souvenir shop.
Remember that? Yeah. And it wasn't cheap. How much was it? Did you buy one?
Well, the name like Fausto on it, I think they put it up to about 300 euros or something. And but no, I mean, good value. But no, I mean, look, I was fortunate enough to have a very good economics teacher when I was in high school. So my first exposure to charting would have been in 1998. And back then, we didn't have kind of charting tools we have these days. But so we would have grid paper, and we would bring in the Courier Mail in Australia, the Courier Mail with all the stock prices, and all the kids in class would take the 2B pencils out and pick a portfolio and chart the charts with a 2B paper on 2B pencil on grid paper. And that was my first portfolio, fun money. And then started trading in 2002 and just for myself, and then kind of, I guess the rest is history. It's been, gosh, that's starting to age myself. The grays are starting to come in, thinking about that. But yeah, it's been a while.
So how did you get so what made you get started with Acorn Wealth? I mean, what made you get that up and running and started getting into the trading industry and the education business industry?
It was something that happened organically, and because I mean, I love puzzles. I loved Mousetrap as a kid. It was one of my favorite games. I love anything where there's a problem to solve, especially ones that have the potential reward of money if you get the puzzle right. And so, I remember when I grew up, I talked to my father about, well, Dad, I want to be the next Bill Gates. Dad, I want to be the next this. I want to be the next that. And he said, son, there's only one Bill Gates. There's only one Steve Jobs. And that kind of disheartened me. That, well, what? There's only one John Sebel. What can I do? And I really fell in love with the stock market early and thought, well, maybe this is something I can be the best at, or something I can excel at. And so when I got my teeth into it right out of the gate, coming out of high school, I just set my mind on trying to figure out this puzzle, and went through a lot of dead ends, as I know every trader has. I'm sure you have. You're banging your head up against a lot of brick walls, and I spent a lot of money. Spent a lot of money on tools. I bought every program I could lay my hands on. The Commonwealth Bank gave me a 20 grand limit, even though I had no job, no income, a ninja loan. And I took that 20 grand and bought everything. I thought, this is an investment in all the best tools. And after 3 years, I was no better for it. That was just so frustrating. And I thought, gee, if you can't spend enough money to find quality education, no matter how many tens of thousands I spent, couldn't make a dollar. I thought, well, this is something's wrong with that. And
Yeah.
I luckily got a great mentor that I met when I moved to Canada for my first ski trip, and decided to stay. And he kind of took me under his wing. He was a self-made millionaire, ex-commodities brokerage owner, and he'd retired already. And he started to teach me the ropes. And once I started, really getting into making some money and understanding how market really worked, not the retail, but how it really worked, I'm like, people need to know that. And there's nowhere out there I could find that taught it. And so it just kind of organically grew from there.
It's funny. When I was in Canada, I told everybody who has ChatGTP, right? And they're like, everybody's like, "Oh, I got it." Everybody's got it on their phone. I said, "Dude, I want everybody go on their phone, and anyone here that's listening, even the recordings, anybody watching on social media, go on ChatGTP and ask ChatGTP how successful is someone as a trader will be without education. I mean, what is your probability chance of succeeding?" And it comes up, and it will tell you. I thought it was like 80. You know what came up? 90 to 95% failure rate. So the first thing I tell John is like, what are you all doing here? Like, you're wasting your time. Oh, I'm sorry. No, you are here because you're here to learn. Let's talk about the other people that are not here, which is where you just said it. You just can't go out there and think you're just going to go out there and start trading and think you're going to, oh, let me go try it and see if I like it. And if it works, then I'll go out and learn it. And, and that's the ignorance where people blow up their accounts. And like what you just said, like even getting started in the school and stuff like that, sometimes you want to give back. Like I had another person come up to me. They said, "Fausto, you're a millionaire. I follow you all the time. Why do you teach people?" I says, "Well, because I enjoy it. I like teaching people. I hate seeing." "Yeah, but what's the purpose of doing it then? What do you need it for?" I'm like, "Because I like teaching people. I'm like, I don't like seeing people lose money because that's bad. Then what's bad for the industry, makes us all look bad, and that's what happens." But
well, I think you actually raised an extremely good point, because this ties back to, I mean, something that really keeps me. Why did I start Acorn is one thing. Why I still love teaching now, 17 years on. We're going into our 18th year with Acorn on November 6th, and 18 years in. Why do I still love it now more than ever? It's because nothing's changed since when I started it 18 years ago in terms of the education and the insight that's available to traders. We're still so many people are being led around by the nose in terms of how the market works, and being lured into bad stuff. But to more exactly to your point, you talked about how many traders fail. So here's something really fascinating. For anyone who's watching, just drop what you're doing and listen to this, because this is impactful. There was a recent trading competition done by TradingView. It's called the Leap, and they give an opportunity for all their customers to compete for some prizes and things like that. But they published the results at the end of the competition. And so this was a month-long competition. They had 60,000 participants, okay. And the results was of nearly 60,000 participants, only 3,828 achieved a profit of more than 1%. Only 3,800 out of 60,000 people made more than 1% in their portfolio. That is quite interesting. And that shows you 60,000 people interested in the market couldn't really make money. And so then you actually go and dive deeper and look at who were the top 5 people? Who were the 5 people that did make money and beat the other 59,995 others?
Right.
And so the results are not what you'd expect. Because Fausto, when you talk to students, when you talk to investors, when an investor thinks of a profitable strategy, what are the normal questions you get asked of how profitable is the strategy? What are the normal questions that people are seeking in ways to make money?
Well, you know what? That's probably one of the first questions I always ask somebody whenever I tell them I get involved in this industry. I ask them, how much money are you looking to make a year? It's not about percent, because listen, if someone came up to you and says, I want to make 20% of my money, I'm like, okay, that's pretty good. I know how much putting into it, $10,000. I'm like, wait a minute. So you're here to make $2,000 at the end of the year. You better go and work at McDonald's at $15 an hour. I'm like, you're wasting your time. You know what I mean? Like, you should be making, you don't need a lot of money to do this, to trade, but where some people have that misconception, but it comes down to what you want to make a year. If you want to make 50, let's say you want to make, some people just want to like maybe make a 50% increase on their salary, right? Let's say they come from $100,000 salary. So they want to make 50 grand, which like whatever, it's nothing crazy. That's 200 a day. That's 20 cents on 1,000 shares. Okay. So I don't really work on a percent. I just work on a dollar amount. People are like, I never really thought about that. I always thought about like, always think about like, on a percentage why. Oh, some people say you got to make 2% on your account. What does that mean? I don't know, 2%. Like if you do, you can't.
Quickly on that, when I was living in Costa Rica in my early days, when I first started trading, when I first started building my account, a small account, started off with 10 grand. And I was in Costa Rica. It cost about $5 a day to live in Costa Rica at the time. It was $1 for a hammock on a beach, and my internet was free, and it was cheap. And I would do little day trades, and I'd make $20 here, $20 there. At the end of the day, I had $150. And I was like, well, that's not much, because you're just looking at it as $150. But $150 every day is almost $4,000 a month. And
right.
At $30 a day living expense, let's say, that's a fortune. So I mean, right. So this comes back to the importance of not looking at the I want to be a millionaire, or I want to be this. It's actually understanding the structure in between, and coming back to those traders, that the top five questions I often get asked that people falsely perceive, I believe, of what a profitable strategy is. So many people look for what's the one with the highest win rate? But win rate alone means nothing, because if you take a look at the top five traders here, none of them got it right more than about 60% of the time. It came down to win to loss. Sure, you got to win to make money, but it was risk reward.
Right.
Every single person in the top five had a minimum risk reward ratio of 2-1 and as high as 11-1.
Right.
And in fact, the third place getter, I think it was the third place getter, only got it right 38% of the time, got it wrong 62% of the time over 100 odd trades, but made more money than 68,000 others because he had great risk reward. And
right.
So it's risk reward ratio, it's risk management, it's and then win to loss ratio, but it's the recipe of all three things together, not just getting it right. You can get it wrong and still be very profitable.
Because you're going to lose. It's part of the game. And the issue that most people have is they hold their losers too long and they sell their winners too soon. And they all have that issue. It's all about risk to reward going into it. That's why biggest thing I teach, even when I teach my own classes, I tell everybody, it's the big thing about being a good trader. It's about controlling losses. And that's really what it comes down to. I don't care about the winners. I tell everybody, listen, we could talk about winners all day long, and we could put feathers in our caps and talk about that. But how does that help you as a listener, as a trader, right? It doesn't help you. You want to know, listen, like when you start off as a trader, or someone hires you, they hire you because they expect you to succeed at it. But what they teach you is, they want to make sure, like, let's say you're a cop, you know what I mean? They expect you to follow the law. They expect you, oh, good job in the back. Like you did a good job. Oh, you didn't. They care about, did you shoot that guy? Did you whatever? That's all they mainly concerned about is like safety, so you don't get hurt. You don't hurt yourself. That's the big thing. And that's what traders have to look at it. We were never taught how to, worry about making money. When I was hired as a market maker, they hired me because they expect me to make money. They didn't expect, but they want to make sure I don't lose it. You know what I mean? They'll always come back to me and tell me what a good job this is. I mean, it doesn't work that way. But getting back to you, John, regarding I'm glad you brought that up, because that is obviously a very important topic that people have to understand about the risk management. But what have you been working on new? I mean, anything you're working on new, like on your new style? I mean, listen, you've been around for a while. People have to understand that. And I always tell everyone, this is very important to everybody. How you find a very good mentor is, like you just said, like you have these big winners out. These people are big. Were they ever in the bad market? with everything, forget about just even COVID, the whatever been through Hurricane Sandy, whatever been through, the financial crisis, the internet bubble. So it's all about, if you could survive that, don't ever look at anyone how big, oh, this is my next millionaire. Stay away from those people. It's all about making a day's pay. But like, what is your style that makes you different than everyone else that's been working?
Well, first, I'd like to say to everyone listening in the audience that if you are losing money, that every single trader out there in the world goes through that stage.
Right.
And if you are someone who's just barely breaking even, congratulations, because you are now in that top 5% of traders probably, and on the way to being in that top one. So just firstly, no one's born a natural trader. Everyone has to learn, and most people learn through their licks. So let's get that out of the way. So what's the progression on from into that 1%, 2% into profitable habits? Well, it comes back to rules. And so our edge, and everyone's got a different edge. I know, Fausto, you focus your edge incredibly good at focusing on the level 2 and level 3 data and so forth.
Right.
I mean, a type of way that people look at the market that's different. To me, our focus is tracking smart money, and it's been a two-pronged process that we've really been just continuing to build on since day one. So everything that we do that's new is really just making that same core philosophy better, more efficient, and that core philosophy is finding opportunities where there's massive insider and institutional buying happening behind the scenes, and that starts at a market level and then moves into looking for the sectors that are the best within that, and then drilling down to the best stocks within that sector. So it's top down until we can find those diamonds in the rough. But insiders on their own isn't a timing mechanism, which is why a lot of people go to all these free sites and find the 100 stocks yesterday that insiders bought anything of. That's irrelevant. It's the right kind of insider buying in the right sector, but then timing that, which is where the patterns come in. So for us, it's always been about finding the stocks that the real experts, the insiders, are buying themselves, their own companies, and then timing that with what I think we do better than most others, which is understanding the patterns. And that's the 1-2 punch. And so to your question of what are we working on, that research process, because I'm again a bit of a nerd. I love scanning. I love looking for ideas. It's like panning for gold in the stock market. But that I would sit down on the weekends and typically spend about 12 to 14 hours every Sunday going through all of these stages of research. And I thought, I am doing the same thing over and over again. There must be a way to automate this. So I've spent the last 12 months and probably in the almost 6-figure amount of investment capital building my own AI algorithm to copy exactly what I'm doing. So I've been training it for about 10, 15 hours every week, speaking to it, copying all of the transcripts of all of my teachings for the last 20 years that are relevant, and duplicating me to do that research. And so far it's, well, I'll put it this way, I probably wouldn't have been able to go away on a 10-day boat trip if it wasn't for the time that that efficiency has now taken over. So that's what we're just starting to roll out now, and what I'm most excited about
amazing.
for that reason.
That's so cool. That's so amazing. And, I think a lot of people are starting to realize that AI is here to stay, and they don't realize it. And what I always liked about you, John, I think that's why we always did so many great events together, is because we do trade very similar. We follow the, follow the money, follow the big orders. Everyone, there's a lot of people that, listen, if I work for them, but when it comes to that kind of style, when you work behind the commodities trader, when you had your mentor, they see the same thing. They're on the floor. They see what's going on. You're just a little guppy in a big ocean. So you just want to follow where the big fish are. And that's really where it comes down to it. So I am actually so interested to see, I want to definitely try it out. Listen, great traders never stop learning. And that's why I have you here. Now regarding about, certain challenges, And I want you to show us a little bit what you're working on, but regarding about everyone that's listening in here, what have you found as challenges that people are having that are not succeeding? Because what makes you've been a trader and you've been a mentor, being a guru forever. What are you finding that why people are not really succeeding or getting it?
It's a great question, and I've had the good fortune of being able to talk to a lot of the 7,000 odd students we've trained over the last 18 years. I've spoken one-on-one to most of them, and the one theme that's consistent is A, either not having a strategy, or B, emotions getting in the way of that strategy. And of course, the other option is not having any strategy and emotions getting in the way, which is the worst case scenario. But I'll give a prime example of that. One of the common ways I see people lose money who do know enough to be dangerous, let's say, is if they don't have confidence in themselves to pull the trigger. And so they'll see good ideas come up. Let's say earlier this year, where we detected that the real estate sector, for example, great example of insiders, the real estate sector at the beginning of this year and going into the end of last year had massive insider buying as a sector. In fact, every time this level of buying had happened over the last 10 to 15 years, it was a bottom you would have wanted to buy. And so, that was one of the reasons we were focused on real estate. So we said, well, hey, real estate's going down at the moment. Here's some great stocks that we're going to buy. Now, that's the rules. That's the strategy saying that here's a great setup. Timing is right. Let's get in. But then for people that don't have that confidence in their rules, in themselves, in their strategy, a lot of people say, oh, I don't know, I'm busy, I'll get around to it, I'll see what happens. They'll wait 3 weeks. And then the next time we're talking, it's like, yeah, hey, did you see that stock? IGR's up 15%. Woo, we're going to take some profit. We're going to do this. And then that group of people then go, damn it, I missed the boat. I knew I should have bought that. I looked at it 3 times, 4 times. But you know what? I'm going to buy the next one. You know what? I'm going to double down on the next one to make up for the ones I missed. And then what happens? And this is not specific to any kind of individual investment, but just investments in general. What ends up happening is people then end up loading up the heaviest at the end of a bullish cycle, or shorting at the end of a bearish cycle because they're chasing that fear of missing out. Whereas, really the best opportunities have to be taken sometimes when it's emotionally the least comfortable to do so. Take energy, for example. Energy, which is a very special story that we are very excited about at the moment. In fact, where our AI model is targeted entirely at right now. But take energy. Energy recently was the worst performing sector this year. Utilities and real estate were the best performing, up about 18 and 16% respectively over the last 6 months. Best 2 sectors. I guess the insiders were right. Energy underperformed significantly and was at almost a 12-month low going into October and beginning of September. And then we thought, hey, this is time to buy, because we're starting to see that same insider trend pile into energy for some very good reasons. But energy was dropping like a rock at that time. So very uncomfortable to buy it. Performance-wise, it was the worst performing sector. But that was pretty much where the bottom was. So I think that's a common thing. Is it's about whatever rules you follow, whether it's ours or whether it's day trading or whether it's selling iron condors or big giraffes. Pardon the pun. Whatever rules you're going to follow, stick to them, and you've just got to execute. What's that?
I'll stick with the big giraffe.
Yeah.
I always tell John, just honestly, you know what? How do you kind of overcome that little hurdle? Because I understand emotions do kick in. Just trade one stinking share. Just buy one share. That's it. Just go into it. And you got to get off demo mode. These people trade on demo mode and they're like, it's after, if you're on demo mode, you're listening right now and you're on demo mode more than 2 to 3 weeks. I don't know who trained you, whatever, you're wasting your time. Just buy one stinking share. Someone's like, I can't make money trading with one share. That's not the point. All the bells start kicking in. You start getting the alerts from the brokerage firm and this and that. Back then, I had to start off trading one share and I had to pay $25 a ticket in and out. So I was already losing money. I'm down $50. I mean, be like, you can't do that. You're going to be down so much. That's the point. That's how you learn. But you know what?
There's a reason why the authorities have banned gamification of trading platforms and banned the bells and whistles going off and rewarding you like a slot machine going when you make a trade, because this is all. So if you've studied neuroscience and kind of, I'm fascinated by it. I mean, this is all about dopamine hits, so trading isn't Vegas. It shouldn't be. It's about making rule-based, educated decisions. But when we're sitting in front of the screen, watching the ticks go by, and the alerts are going off, and the noises and the excitement, and it can be tempting to break those rules and push all the chips in. So that is where systems. It's impossible to eliminate that. Everyone is human, but that is where systems and rules. But that's why I use AI, not to replace me, but to eliminate as much of that noise as possible, so that when I step in to make the decision, I'm making a decision with the clearest amount of data, with the most amount of noise already taken out of it for me, so it makes it rule driven. And the next step in our model is now to actually have it remind us when we're breaking our own rules, to say, are you sure? To be an extra sense of reason, before you push the red button.
Well, why don't you show us really quick, John? Maybe you can show a little bit of that AI that you're working on, or a little bit of your style, so everybody understands. Because like I said, you and I were very, very similar in our following order flow. Maybe you could see a little bit more of what we could show everybody what you got, how you do it.
Yeah, absolutely. So I'll let me just bring up one of my charts here. Okay. I recently, well, this is I think probably common with a lot of people in the audience. Has everyone noticed that every single application has been updating in the last few weeks? Microsoft Windows has now become Copilot powered by AI. All my Outlook applications changed. My Microsoft Edge upgraded. My Avast antivirus browsers now got stuff going on. So many browsers now that I have open. But the right one should now be popping up. And let me know when you've got it, Fausto.
Oh, there you go.
Excellent. Yeah. So I mean, this is just an example of some things I'm doing right now to which shows the rules and strategies that I follow. So Groupon, for example, is a stock that I'm short, and this triggered this morning, right before we actually came on live. So let's talk about the process here at a basic level. So first question, the very first question that I would be asking before I look at the symbol, before I look at anything else, before I look at any indicators, is what is the pattern? And we can see the pattern there is potentially a head and shoulders pattern, which is one of the highest probability bearish patterns out there, out of the many out there you could choose from. Nothing's 100%. It could fail tomorrow. I could stop out of this tomorrow, but that's not the question. I can't control whether this wins or loses. All I can control is, does this meet my rules, and what am I willing to risk? So number one is the pattern Right. For me, absolutely. Number two, what about the smart money? So let's actually take a look at that. I'll bring up one of the better free sites you can use. So let's just go to openinsider.com is one of the free sites. There's lots of them out there, but let's take a look at Groupon. So if we take a look here, free ads. Anyway, when we take a look at the data there, you'll be able to see that there was actually some pretty sizable selling, but really that was a bit earlier, back in 2022. We've got some small amount of insider selling there. So is this a really high conviction trade? Does this tick all of my boxes? No, this is purely just, for me, a pattern based trade. So I would call this a trade. For anything more than a trade, I would require the insiders to be present, either bullishly or bearishly, depending on the direction. So okay, what about the execution? So so you can see here, here's the September 25th, 8:21 this morning, my time, I'm assuming. It alerted me. So rather than same with this one, BEPUN, it's another stock that I'm in right now. I can look at that in a second if we wish. But instead of sitting there and watching the grass grow, for my style of trading, which is more 3 days to 3 weeks on a trade, or 3 months to 6 months as an investor, instead of watching the ticks go by, I'm waiting for the time to be right for me to look at it. And so that was waiting for this to break through support. So I actually I found this trade when Groupon was up at $13. And I said, I don't want to short it at 13. I want to short it when it breaks support. So let me know when it breaks that $10.50 area. And so as it broke down, took that short. Now, my stop loss on this is based on the hourly chart, because it's just a trade. Because it's just a trade, I don't want to take much risk. I want to minimize my risk, and I'm not afraid of it stopping out. So, I've gone in and I put my stop loss at $10.59, I believe it is. And my entry was, $10.20 something. So I've got, 30 cents-ish of risk, which is 3%, roughly. And my target, well, what do I need to make? What do I need to make to warrant a 3% risk? Well, my target needs to be at least 10, because that's a 3-to-1 risk-reward ratio. So where is my first target going to be? It's going to be down here at about $9.20. Now, if this Head and Shoulder powered onto its potential further targets, great. But I'm taking some profit at the what I would consider the most conservative level. Then I can lower my stop loss into the profit territory, let the rest run. So if it does stop out, it's still a win. And if it runs further, it's an even bigger win. So that would be an example of a short. Of a long, I mean, just broadly of the energy sector. Now, if we look at the energy sector, this is, I'll see if I can show you something real quickly here. This is what I was speaking about in regards to the way that this to me is a much more exciting type of strategy than the trade I showed you before. If you take and I'll just bring this up. Have you got that showing the 6-month performance there on the screen, Fausto?
What's that? Say it again.
Can you see the 6-month performance here?
Yeah, I see it right there.
Yeah, so this is what I was talking about earlier, everybody, is that, again, 6 months, over the last 6 months, if you think about the market being up, the market isn't up. Certain sectors are.
Right.
It's a market of individual stocks. One thing my mentor taught me 20 years ago, or whatever that was, he said, it's not a stock market, Johnny, it's a market of individual stocks. And so the market's not up. Utilities are up. Utilities are up 18%. Real estate's up 14%. Financials are up 10.25%. And the other 1, 2, 3, 4, 5, 6, 7, 8, 9, the other 9 sectors have all underperformed. So only 3 out of 12 sectors are actually really up this in the last 6 months. So statistically, if you threw darts at a sector as your way of investing, and you thought, hey, I've picked 3 different sectors, I'm well diversified, well, probability-wise, you would be barely break even and more likely potentially at a minor loss. So what has the real market been doing? It's actually 3 sectors that have been mostly performing. Same with the last 3 months: real estate, utilities, financials, communications. 1 month, utilities, real estate, financials. Again, 3 sectors out of 12. 1 week, basic materials, energy, industrials. We're starting to see a shift in the short term. So when you go and take a look at that data is telling us how have things performed based on price. But price alone is not necessarily a great predictor. Price with patterns, that's a leading indicator. Price alone is a lagging indicator. So how do we add things to a simple structure that give us potentially forward-looking insight? Well, now we can combine the price and, most importantly, pattern with where the smart money is going. And if we take a look at the example of real estate I gave earlier, this is what we saw last year. You can see that the sector represented here, the blue line, had been going straight down. And the green line down the bottom shows the amount of buying coming in versus selling, the buy to sell ratio. So whenever that, in simple man's language, when that green line spikes up, we're seeing very high concentrated buying level interest from the owners of the companies. This doesn't take into account institutions and options and stuff like that, which can skew data. This is purely focusing on insider buying of shares, the most important part of the data. And so you can see here that over 10 years, as we talked about earlier, massive concentration of buying that actually had never been seen before in the last 10 years. But every time we got anything close to it, it was a key bottom in the real estate sector. So we've seen this really big surplus of buying, like a wave crashing onto the water. This was the tidal wave. This was the big one. But what was even more fascinating and potentially more valuable was that the index hadn't responded yet. So the further it went down, the more buying came in. And there's a D word that traders call this type of action when price goes one way that retail traders are mostly looking at, but behind the scenes, something else is happening. And the D word is what? Divergence. One of the most powerful indicators in any format you want to use it. So you've got this very powerful divergence. Real estate bottomed at the end of last year, and surprise, best performing sector. So this is kind of this is what excites me, and that's exactly what happened with IYR, and why we picked it as one of our favorites. It was my heaviest investment up until 2 days ago when I liquidated those positions and moved into a new sector. So where am I looking at next? Well, IGR was my biggest holding. We'll skip that though. Okay. So this is something I'll just skip ahead to. This is the trend we're starting to see evolve potentially next. Again, I'm not a financial advisor, so everyone do your own due diligence and see what's right for you. But the things I look for is, well, where's the next one? So real estate's been the best, but what's going to be potentially next? And energy is showing a similar kind of trend. That's starting to test a downward channel it's currently in, just kind of right at that potential breakout point. But for full disclosure, I am long XLE. I hold a position in that sector, the ETF. But the reason why is because the pattern's right, for me at least. Secondly, it does have that insider smart money element. And what you can see here is, again, from March of this year, look at the way the insider buying versus selling is scaling up like a powerful stock breakout. That's exactly what we want to see. And so for us, when we go through our kind of top-down research of deciding where are we going to focus our energy, pardon the pun, where are we going to focus our money and energy towards this month, this quarter, we start with this. And then we drill down to finding the best stocks. And the energy sector has a very impressive story behind it, because essentially, we're going into this AI era where an AI search uses 36 times more energy than a Google search, roughly. That's the data I've read. We're going into an era where the energy demand in the next 5 years is more than what the US is, as an entire nation, is even capable of providing now. So demand on energy, and especially renewable and clean energy, I think is going to be tremendous. So how do we find those diamonds in the rough when I'm not an energy expert? And this is where that smart money and pattern becomes more than just a trade. And this is where our AI algorithm actually analyzes not just the news, but the day-to-day movements in the sector and the market, and then analyzes every single stock in the market in that sector that stand best to benefit from these themes, and then waits until the timing is right, and then alerts us to it. And so that's been just fantastic. And one of the Canadian stocks I'm holding that was alerted by this about a week ago, right here at around $34, was Brookfield Renewable Partners. So again, full disclosure, I'm long that, and that was one of the signals our AI engine gave us, with an entry, an exit. And so it was very easy for me to trigger, because I only had to look at it quickly and say, yep, execute. That's in a nutshell what we do every day, and what I'm most excited about now.
Now, how could somebody, if somebody wanted to kind of follow you along and get some more data on this? I mean, like I said, we're almost out of time here, and want to kind of like get to know a little bit more about how to find you a little bit more, John. How do they go about doing that? Because
we've actually, it's funny, by the way, to all the listeners, I just want to let you all know how much Fausto cares about you, because this is the first time on the show. A few minutes before we started, Fausto said, at the end, you can talk about one of your products, or, you know what, if you've got something you can give them for free that's really high value, maybe you could do that. And so in the 1 minute I had before we went live, I was able to put something up for everybody that's absolutely free. So the best way to check things out, and I'm just going to put the link on the screen so I can type it out there, www.acornwealthcorp.com/CTU. What that'll give you, and I just got live a couple of moments before we started, so we'll just make sure that worked.
Yep, it's there.
Terrific. This is a bonus we had available for an event we did a couple of years ago, and so it is live now, and I'll make sure that anyone signing up now does get access. If you have any issues at all, because we might need to enable an extra tick box on our back end, just email us at info@acornwealthcorp.com. But this is really powerful. It's a 14-day trading success accelerator, valued at over $297 that we do sell at that price, and stopped offering it for free. This will give you 2 weeks access to our alerts, 2 weeks access to our live trading room, 2 weeks access to a one-on-one coach to help you go through the material if you have any questions. If you are a newer trader, it is a great way to kickstart picking up a strategy if you're new, and it's a great way to add the smart money edge if you're a seasoned veteran. So it's great for all traders of all levels of experience, and of course that's the best way to find out more about anything, is to actually get in there and see it work.
No, it's pretty great. It seems like a lot what you do is what we do too. And it's great because that's how you have to learn. You have to know the style. You got to basically need that coaching. You need to be in that trading room. You need to get that letter. And I tell everyone, like I've started before, and that's why we do this show. We have all these guys like you, great gurus, come in. You got to try a little bit of everyone's stuff and kind of see what you kind of adapt. What is your kind of style? And then, and like I said, go from there. But don't try to be, like I said earlier, about going on ChatGTP and finding out and be part of that 95% failure rate. The reason why is because they're not learning, and that they're going out there trying to learn on their own. But you could see, it kind of makes a lot of sense.
Well, and the funny thing is that just remember that there isn't just one way to make money, but one thing that's common in all ways to make money is that all strategies will have failures. So when you can look forward to the next loss because you're one loss closer to the next win, when you start to realize that you're trading a system, not a bet. When you're trading a system, that's where things get exciting. Whether you do 100 trades a month or 5, it's the system underneath it that's key. So I would encourage anyone who liked what we chatted about today to check ours out. Maybe it's a fit, maybe it's not, but you'll definitely take something valuable away to use for whatever style you decide on.
Well, thanks. John, thank you so much for coming here. And before I let you go, I always like to ask, one question to all my great gurus, like guys like you. What do you do on your spare time? What exactly, if you were not a trader, what would you be doing right now?
I'm already doing it. So we last year, we moved into our dream home. I thought I wanted the big house at the top of a building we bought our dream penthouse. I thought that was the sign of success. I've made it when I have the dream penthouse. And a year into that, I'm like, I'm not a penthouse guy. And we rented it out and we moved into an RV. We live in a camper van right now when we're not here. And most of the year we're in campsites and seeing nature and cooking smokies on the fire and drinking 30-cent beers from Budweiser. You get those so cheap down there in the States. Anyway, so really, work to me is something I love and enjoy. So being able to be in nature, appreciating the simple things, and be able to figure out my puzzles in my spare time, to me that's the perfect marriage. So I guess that's my answer.
Good. You know what? And you're in the right place. So where you are, you're in British Columbia. Nature's up there. You get skiing. You got everything. And that's awesome.
And we're about to hit the Tetons and Zion National Park for the end of this year. So very excited about that.
Well, John, thanks for coming here, and I really appreciate it. We got to have you back again. And everyone, please take advantage of John's link there, and follow him up a little bit and learn a little bit more about his style. Like I said, he trades a lot like me too, and that's why I always like to have him on. And look forward to having you back. And everyone, thanks for listening. Make sure you subscribe to the channel, give us a thumbs up. Make sure you share it, and feel free to watch it and share it and watch the recording. We'll have a couple of nice little shorts that came out of this. You see some highlights of it. And then you can watch on Spotify or YouTube or any of our channels. Thanks again, John. Enjoy it, and look forward to meeting up with you again.
Absolutely.